There are two kinds of false breakout. The first gives the impression it's going to break out from a support and resistance line, but then reverses and continues in the opposite direction to the way that you wanted. And the second is more unpleasant. It breaks out from the support or resistance line and then reverses back through your stop loss, only then to continue in the way that you first thought it would. Now you're holding a loss on a trade which should have made a profit. Maybe worse, you reversed your position and got killed both ways. So how can you avoid both of these scenarios? Well, if you use trading sticks, you can protect yourself from both, but you must accept that protection comes with a price. You may miss the move completely. It's down to your trading style, whether it's conservative or more aggressive. Of course, you can have your cake and eat it if you place touch lines further away from the false breakout positions. Okay, let's look at this example and how to deal with it. Here we can see a line of support. If we sell and close below this line with a conservative stop loss, then we'll get stopped out probably with that loss. The reason being, of course, is that if it is a true support line, we can place our stop loss relatively closely above the actual support itself. If we place a straddle setup, we may actually lose both ways. What is required is a special instruction to guard against a false breakout, and even if we intend to place a straddle, we can protect both at the same time by using a false breakout above and below. Let's look more closely at a false breakout through the line of support. We have two false breakout commands, the buy false breakout and the sell false breakout. The codes for these are BFB and SFB. We're going to use the sell false breakout in this particular example. We are looking for a close below the SFB line. Notice how the candles are respecting this line as if this is the new level of resistance. Now let's look at what happens next. So here we can see that the resistance line didn't hold at all, and the price has broken back through, and the resistance line has now become the line of support once again. If we'd have placed our stop loss above this line, then we'd have been taken out, or at worst we could have even reversed our position. So if we had reversed our position, we'd have been stopped out again. Now the market shows its true nature and crashes through the support line, and we were correct all the time. This is a frustrating scenario that comes up again and again. Now let's look at this example running in a live chart to get a full appreciation of what is going on. Okay, let's start by drawing our trend line, our sell false breakout line. So we're going to place that at the swing low. Right click, trend line and SFB. Let's move that over slightly so that it's easier to read. And let's speed up the chart so that we can see the action happening. Okay, so what we're looking for here is the price to close below this line, and this will then convert our SFB line into a limit order. So we're looking now for the action to go above this line and close, so that we can then again convert this into a sell stop order. So here we can see that the price is respecting the new resistance line, and it looks like we may have actually missed the move completely as it's breaking down. However, as we know in hindsight, this is actually a false breakout. So we're waiting for the price to bounce back above the line. So now we can see that the price is actually breaking above the resistance line and looking like the resistance will become the support once again. Keep an eye on the sell limit order. This should convert back to a sell stop order, and when this happens we are then looking for the price to close below the line, and then we will get into the trade. There's our sell stop, and we're now waiting to see if the price closes below. If it carries on up, then we're still not in the trade and it was a false breakout and we've not basically damaged our balance. However, if it carries on down, then we're still in the trade and hopefully it will be a successful profit. So now we can see that the support line is holding, but there was one pierce of the line about 2 bars back. The current bar is testing the line again, and this I believe is the bar that's going to smash through the line. Here we go, and so therefore on the close of this bar we'd open the trade. And there we go, trade successfully opened, false breakout avoided, job done.